What's up, YouTube? Brendan from Market Makers, your home for Wyckoff and Fibonacci TA. Let's jump right into the Bitcoin, my friends. So let's look on the daily. We're going to start off here because, as you guys know, this is peak resistance time. We're going to focus on the 4-hour time frame, what the actual price action is doing. But Bitcoin has been making some serious moves. It flipped the 1 fib, as you can see, holding it as support. We'll focus in on that in the smaller time frame. But this area, we talked about it the last couple of videos. And again, this area ranges from the 89 EMA at 45.3, 45.4 to the 233 at 46.4 to the 144 at 46.780. And then as if that's not enough, we have our peak volume resistance as well. And we have a Fibonacci pattern right here. That's that bright white line. Peak of confluence, point of control for volume. Big volume candle right here, okay? So this is getting near D-Day, my friends. This is where Bitcoin will have to decide once and for all how bullish does it want to get on this leg up, because Bitcoin's been behaving very bullishly but very controlled. He's been a very good boy. He would get a candy bar today, okay, for his behavior. He's consolidating where he needs to consolidate. He's holding key support. The markets all went up today. So tomorrow, something that could affect Bitcoin is the CPI report, inflation report comes out. And if that number is above 7%, you may see a sell-off in the markets. If that number is below 7%, the Fed number for inflation, which is actually like 15%, but if that number is below 7%, you could see a rally because there's this idea, all the talking heads in media are saying that the market has priced in a future Fed hike, and they're rating that at about 0.25%, 0.25. However, the thought process is, because a couple of Fed officials came out and said they're prepared to go up to 0.5%, and that upset a lot of people. So the markets may have a little temper tantrum tomorrow if this inflation number comes in hot. So we'll have to see what that number is. It could definitely affect what happens with Bitcoin if the markets dump. They pump, so Bitcoin is gearing up. It's an accumulation. We're going to focus on that in a smaller time frame. But just looking at this, this is the D-Day, okay? This is going to be when we finally come up and test this area, this 47,260. If we do flip this area, get past these moving averages, this will be great for Bitcoin because then you're definitely testing 50K. And if you flip 50K, like I said last video, you are biased to test 61.1, basically 61.2, okay? That would be your targets, that would be your goals, and we'll have to see if Bitcoin can hold up and do that, and a lot's going to depend on what happens tomorrow as well. Now, don't get me wrong, when that report comes out, Bitcoin may not react at all. These markets aren't like tied hand in hand, okay? So if the markets start to sell off, you may see that materialize in Bitcoin maybe over the weekend. Maybe Bitcoin pumps up, but it gets rejected here, whereas it wouldn't have got rejected if that number, if the inflation number came in lower. Lots of different options. I don't do forecast, I do analysis as a trader. So let's go ahead and look at this on the daily time frame. Oh, so this looks complex. I'm going to show you guys how to do this here, okay? Because this is actually very useful. Had a lot of requests about fib time. People want to know how to lay it out. So this is my fib time. I'm going to show you how I did this, but one important thing to note here, the next fib time date, the way I have it currently laid out, is March 1st. So I like the way this layout is, which is why I'm going to share this with you so you can do this on your own trend-based fib, okay? Because if you look at this, look at the candles. See, what I'm looking at is the actual candles being impacted by the fib. I'm looking for if they did trend reversals or change in behavior. Big trend reversal here, right? You see that big dump? Here's a big nice pump, and here's a massive dump. So some of these moves are quite large. Like this candle right here, you're looking at a 11% move, and if you include the following candle, which completed the trend, it's a 20% move. So I like the way this laid out. Same here. If you include the candle before, which was part of the trend reversal, a 16% move. So this looks really good. So let's go ahead and delete this, and I'll show you how I applied it. And then I'll show you what I did with these different fib levels here as well, if I can remember. So let's go ahead and get rid of that. And then we'll look at Wyckoff on the 4-hour time frame. Get rid of that. This is what we're left with. So the first question was, how do I use trend-based fib? Couple different ways you can use it. First way you can use it is to zoom out on a larger time frame and use key points. Okay, so you want to use key points, not just not just like a random swing high and swing low. Pivotal points in the market. You can start off with a zoomed out, like on the weekly trend-based fib time, and you can just play with it and see what you get. And I say play with it because you want to see the candles reactions when they hit these potential pivot points. Remember, fibs are nothing but potential pivot points. You go from your previous all-time high to your market low to your current all-time high, and you can look at that. Oh, right on the one fib. Look at that big dump candle. And some of these are not going to be as dramatic, but what you're looking for is if they are pivots or continuations, because fibs can be continuations. And this is a great example. 382 was a buying candle. 0.5 selling candle. These are weekly candles, guys. So keep in mind these are a substantial amount of points here. What, 5,000-6,000 point swings, buying candle, and then this was your pivot, and then you go right back down. Look at this, and then you have a dump candle, and now you're going back up. So you can play with this in different areas on a weekly. You use key points like an all-time high to your selling climax low to that swing high right there. See how your fibs line up. If it's making sense, you have a pivot up here, a pivot down, a pivot down. So you can look at them from different angles, play from different significant points, and then you can do it on different time frames. If you start getting too close, to the actual price, you're going to have everything squished in, okay? So I don't really go anything lower than a daily. I mean, you can play with it on the 4 hour and 1 hour, see if you can find something useful, maybe fun to play with. But I think I had this laid out like this here on the daily, which is a selling climax candle to the up thrust down to here. And this would give us, what date would this give us? This would give us February 17th and March 4th. So you can lay it out this way, and you have a nice pivot candle here. I would probably play with this a little bit more and figure out exactly where I want to put it. Where else could I put this? I guess we go higher up here. Maybe go from the all-time high and do it this way. This is probably something else we could try here. All-time high, selling climax candle to your up thrust. Let's see how this laid out. March 1st. Yeah, this is the one that I like for this trend because the size of the candles that are hitting the pivots here, hitting the fibs, these are significant candles. These are big moves, especially a candle like this is a very significant candle. Just counting that one candle is 12% on the daily, okay? So you're going to have, different size candles. Here you got a little bit of a doji. This was more of a continuation, as you can see, because it's just lateral action, right? It just went lateral, and then you had a pivot up. So just play with it, see what it looks like. Always find confluence, meaning looking at everything the way you lay it out. See if it actually changes trend, if you can see any noticeable patterns, useful information. All right. Now, let's look at this on the daily. A couple different things we can do here. Let's take our fib retracement, see if we can figure out exactly what price is doing here, okay? We'll go from our up thrust candle here on the daily, which is like the beginning of that wave projection, to the base down here. I'm going to pull this in a little bit. I'll show you how I had this set up, right? So you see I tagged it down here on this base, the low in the candle, and look where you're hitting your head right here, the 618. So you wick through it, here you wicked it, and then you got rejected. So the 618 is kind of your ceiling. That's just a simple fib retracement. And then I think what I had was a trend-based fib extension from the selling climax low to the up thrust down to that swing low. Yep. And now look what I did. See the one fib from the trend-based fib is your base. You see this? This is a busy screen with the trend-based fib and everything on here, but if you lay it out on your computer, you'll recognize what you're doing. But what it did was it really boxed in Bitcoin, didn't it? You have the one fib as your base from the trend-based fib extension. You have the 618 as your ceiling. Is any of this necessary? No, it's just useful to see. I don't trade with this stuff on my screen. I would probably leave the trend-based fib on here, but basically I'm utilizing my Darvis box and looking at the Wyckoff cycle. Here on the daily, not a whole lot of Wyckoff going on here, but buying climax or selling climax candle, you denote it here by the long shadow, and then you have an automatic reaction. That's all you have on the daily. But if we go to the 4 hour time frame, 4 hour time frame, you can see more information. 4 hour time frame, let's go ahead and pull this down. put this on. You have your selling climax candle. You have your automatic reaction. This establishes your trading range. And you now have a secondary test, okay? So price came up, made a top, made a bottom, and now it reconfirmed the top, and now it's trending. And now we're in that phase. We're going to possibly get down thrust or just stay in the range. And you'll see recoil back up to the top, possibly get up thrust, or you can just stay in the range and then eventually break out. When will you break out, you might wonder? Well, you have to track your volatility. It's what we talk about all the time in this video series. And the ATR right now is extended, or it's elevated. You see this? So does it have to come all the way down to this baseline? No, it doesn't. It could stop anywhere it wants to and turn back around and do something like that. But we can see in recent trend before these larger moves, came to the baseline, came to the baseline, came to the baseline, came to the baseline, and then worked its way up, okay? So more than likely coming to this baseline. So I think you have some consolidation ahead, and that just means candles staying closely grouped together, maybe dipping below the range, above the range. You'll have to watch it. As you can see, you just have volume vacillating back and forth here. Some good buying. Not a lot of candle action as far as movement, obviously, on the 4-hour time frame. Volume momentum's been really low. Everything's been pretty peaceful because you are in consolidation. So one thing you need to watch, obviously, here as well is you do have a beginning of a double top formation. So if you did come down, your neckline would basically be this trend line. You could have bullish, there could be a lot of demand down here. So as soon as you broke it, you could get bought right back up. But just be aware of that. You do have a double top type formation. But more importantly, you have the 55 and 233, which would be a bullish cross if you did start to get a little bit more upward momentum. These are going to cross. As long as prices doesn't fall down, these are going to cross. This is really bullish in a 4-hour time frame. And again, you get above 47,260 on the daily, you're bullish on the daily too, and then you're just taking off. If the stock markets just go sideways or slightly up, Bitcoin will be off to the races, in my opinion, if all that can hold and stay true. So let's look at a couple indicators while we're here. Check out our no moving average. Of course, that's green. Check out our caterpillar, see the volatility, starting to bottle up, but as you can see, we got a little ways to go. That's why I said we're going to be accumulating for a little bit because you want it like this. To get this nice price movement up, which again was what? This was, I forget how many points this was. What was this, 30,000 points? This was a trough to peak, a 25% move. So this was a big move. So to get something else like this, we got to be pretty tight here on the caterpillar. And right now, as you can see, it's pretty expanded. So I think what is today? Wednesday? I don't know. It depends how much it tightens. If candles don't move around a lot, maybe by Friday we could get something. Maybe this weekend will be a good weekend for some movement. It's been a while. So hopefully, hope for the best, prepare for the worst. Let's look at Ichi. And we got a nice ride up here on our moving averages. Nice thick green support cloud beneath us. We have a nice 45 angle. Shout out to you guys in the comments that told me about the trend angle here. So we have a nice 45-degree angle. And everything's bullish. This is bullish momentum, okay? This is bullish accumulation. So I know a lot of people look at this, they're not quite sure what it is. This is textbook Wyckoff, okay? So on the daily time frame, what you're doing, if I can back up one here. Go ahead and get rid of this. You exited your trading range down here on the daily time frame. Okay, let me go ahead and box this in for you so you can see what I'm talking about. You have your selling climax candle. You basically have your automatic reaction. And we didn't have any type of retest at the base here, as you can see. But what you're doing now is you're forming an accumulation box higher up, okay? So you exited this trading range, and it's right in line with this trading range right here, which almost gives you like a cup type pattern on a daily time frame. But we're staying really bullish. I mean, just look at the candles. They're not really coming down. They're not breaking the range yet. They haven't done it yet. So this is staying really bullish, just like it did down here. And then at some point, this is going to, when the volatility comes down, and if we flip those moving averages on the daily, this is going to want to come up, or at least attempt to come up to that 47,260 number. So we have to keep an eye on that number. Again, that move could happen sometime in the next couple of days, it looks like. So we'll just have to watch it closely. We're going to be above everything. Let's throw some crazy moving averages, like a 377. It's the EMA number. So that pump got us above the 377. In case any of you ever had the need to look for it, the 610. We're below the 610. So we're below the 610, but we're above the 377. I'm just teasing with that. I don't ever trade with those. But let's look at what else do we have here. Our Kaufman. We should be green on that as well. Yeah, we're green. I mean, we're going to be green on basically everything, especially on the 4-hour time frame, as you can see, because we're just in a healthy situation. Whenever you get above the 233, it's a measure of price over time. You're going to be in a healthy situation. Let's just check this one last thing. Zigzag channels. We are above the median line here in the channel. So again, this is a bullish situation. It's kind of like a 45, but it's always through near wherever the price action is. It's the midline of the range of the channel. So I prefer a hard 45 for an angle. But just take a watch this, guys, and just keep it on your radar. See what happens with it. I don't expect a lot of momentum, but again, tomorrow that CPI report does come out. So be aware of that. Just give a casual nod to what the markets do, or I'll put out a video tomorrow as well for the pro trades. You guys can watch that. I'll go over what the reaction is, but it could be really bullish, could be really bearish, or it could really just be flat. And it's hard to tell you because nobody knows. Nobody knows what that number is going to be or how the markets are going to react. And of course, how those markets react will eventually affect the crypto market as well. Guys, if you like this type of TA, our Discord link is in the video description. Love to see you guys there. Lots of education material, and we do trade signals and community and all that fun stuff. And I think that's about it for this evening. It's about 8 o'clock, guys. Have a fantastic evening. Talk to you guys tomorrow. Take care.